So when it comes to production policy, we have received the first data on how much OPEC plus production has fallen. That's between 300 and 700,000 barrels per day. So it's a bit less than was expected by market participants. So this is definitely not helping. On the Russian side, what we have seen so far is that Russian production keeps holding up. So that's also a factor, keeping the market better supplied than some had expected earlier this year. But at the end of the day, I still believe that the European embargo will translate into lower Russian production, potentially also with the February 5 deadline on refined products. Essentially, I guess it will be more difficult for Russia to find the markets for all these barrels, and that means lower Russian production. At the same time, we look out for an easing of COVID policy, and this should also translate in higher demand. Here, clearly, the focus needs to be on emerging Asia, accounting for 75% of oil demand growth next year, and less what's going on in Europe and the US. So we also see prices going above $100 a barrel next year.
Okay, so also calling triple digits. Gio, while I have you, just talk me through your current thinking on President Xi's visit to China. Of course, the conversation that has come out of this that relates to the oil market is the fact that we could soon see these two countries transacting outside of this third-party currency, which is the USD. What do you think about the future of yuan sales for oil? Are we likely to see it come up? I mean, it's a conversation, it's a question that always pops up when you talk about China-Arab relations, but how close are we to it at this point, and who would actually benefit?
Obviously, it makes sense that the largest crude importer, China, and the largest crude exporter, Saudi Arabia, work together on this. But in the past, we have heard already targets to have the oil price connected to the euro, more recently versus the gold price. So at the moment, I believe it's more a gradual process and not anything major to come up that we move in that direction. Also, we should not forget that Saudi Arabia's currency, the rial, is pegged to the US dollar. As long as that stays in place, I don't see that Saudi Arabia is an incentive to move to the yuan as a currency to price the barrels of oil more meaningful.